talking to Rahim Madhavji, president of Knightsbridge Foreign Exchange. Rahim, let's talk about the high-flying loonie. How much longer can the Canadian dollar remain at parity or better compared to the US dollar?
I think our forecast really throughout 2011 is a range of between 97 cents and 103. And so we do think the Canadian dollar has strong momentum and will continue to oscillate around parity. The key drivers for the Canadian dollar is a strong commodity story, global growth, and an underlying uptrend in the safe haven currency of the Canadian dollar.
So Canada is now a safe haven currency. I can remember back in the 90s when we were like this hugely indebted country and everyone was selling the Canadian. All of a sudden we're in everybody's good books now. Is that right?
It's definitely the case. I mean, the Canadian dollar is still a very minor player out of all the major currencies, but the underlying trends in the commodity story, strong gold prices, high oil prices, and overall global growth really puts a strong force in the Canadian dollar relative to all other currencies out there.
Now, what about the long term? If you look, throughout history, the Canadian dollar has almost always been worth less than the US dollar. The US economy is 10 times larger than ours. They're a global economic power. We're at best a second-tier power. Long term, where do you see the Canadian dollar versus the US dollar?
Looking many years out, this is definitely an interesting point in history because the Canadian dollar is so close in terms of value to the US dollar. We would generally say at Knightsbridge FX to really continue to look at it on a short-term basis, where in the short term we would continue to see it oscillate around parity. In the longer term, we would probably say this is probably the new reality for Canadian businesses and Canadian retail.
So you see long term we will remain close to parity?
Yes, that would definitely be the case.
Great, thanks Rahim.
Thank you.